Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1147A, and today's date is December 8th, 2016, and the title of the episode is The Economic Indicators Turn to the Dark Side. Let's get into the economic collapse financial news. Now, we've talked about the economy before. We talked about getting prepared before. We talked about all the different financial news, the political news, the geopolitical news, and we understand what's happening right now. The one thing we need to really understand is that the elite are trapped right now. The central bank is trapped right now. And if we go back through time, right before they bring down an economy, they need to show everybody that the economy is incredible. They need to make you feel comfortable. And this is what they're doing right now. Because if you look at the stock market, and I wouldn't be surprised if it goes over 20,000, they need everyone to absolutely, in their soul, believe that everything is fine. Because what's happening is all that news that is out there about all the different scandals, about manipulation in the precious metals market, about all the lies that's going on, about the theft of funds. Well, what's happening is the truth is coming out. And the elite, the central bankers, the U.S. government, they know it's a matter of time. And, of course, they're trying to fight this with fake news and things like that, but they're not going to win this war. And what we're seeing right now is more and more of these stories are coming out. So what do? Well, they create this illusion, and they make it grand, where everything is absolutely perfect. Because remember what they need you to do. They need you to keep your currency in the bank. They need, I should say all of us, to not invest in precious metals. They need all of us, if you have stocks, to keep your stocks, don't liquidate. Don't sell them off. They need everyone to do this because this is the way their scam works. They need everyone in. They can't have people realizing that something's about to happen. And this is why we are seeing what we are seeing, which tells you, and if we look back in time, that we are headed towards this greatest crash that we have ever seen. Now, we've been talking about this for quite a while. We've also been talking about manipulation of the gold and silver market, which a lot of people really didn't believe. But what we can see right now, that has come completely true. And it goes much, much deeper than just Deutsche Bank. Actually, Deutsche Bank right now is pointing their finger at UBS, HSBC, Scotiabank, and many other banks, Bank of America, Barclays, saying, oh yeah, everyone's involved in this. Now we understand they settled out of court, they paid a fine. But there are documents out there where they were speaking to each other. And it shows they were manipulating the market. Now the documents were surrendered by Deutsche Bank. And traders and submitters were captured coordinating trades in advance of a daily phone call, manipulating the spot market for silver, conspiring to fix the spread on silver offered to customers, and using illegal strategies to rig prices. And what we see right now is that the documents show, among other things, how two UBS traders communicated directly with Deutsche Bank traders and discussed ways to rig the market. And if you want to see the text, they're on the X22 Report. If you're on YouTube, you'll see it there. In the first example, you'll see that Deutsche Bank and HSBC traders in which one HSB trader says, really want to sell silver? To which the other trader says, let's go and smash it together. And we can see at this point that this is ongoing. And we can see from another chat transcript on May 11, 2011, reveals a Deutsche Bank trader telling a UBS trader that the cartel were the silver market based on feedback from the outside traders, to which UPS replies, referring to the silver market, we smashed it good. On June 2011, chat between UBS and a Deutsche Bank trader comes down to the following. If you have stops, who you going to call? Stop busters. And we can see right now that even though the corporate media and the U.S. government and everyone else was saying that there is no manipulation, there was. And this goes much, much further than this Deutsche Bank and these banks. It goes all the way up to the central bank. And what they're very nervous about, and I'm talking about the elite, is that it will eventually get there. Remember, they do believe there are two sets of laws, one for the elite and one for the serfs, being us. We can see this with Wells Fargo. Now remember Wells Fargo, when they had all these fictitious accounts and they had employees basically set up all these different accounts using forged signatures. And this was done like 2 million times so they can collect the fees on accounts. This is a fact. Now these individuals, they want to sue. But when you sign up for Wells Fargo account, you're required to sign an arbitration agreement, giving up your right to sue the company and requiring you to have your case heard by an arbitrator, paid for by and dependent on Wells Fargo instead. Now, Wells Fargo is using the argument that since these accounts were signed up with forged signatures, it applies to those individuals. I know it sounds ridiculous, but what's worse is that the courts are buying it. So basically, someone forged your signature. You can't sue because they're saying that you signed something that says you can't sue, but you never signed it. And a federal judge ruled last year that it was not wholly groundless that a customer could be forced to arbitrate over accounts they have never agreed to. That case is now being settled according to legal filings. Well, of course, they don't want this to go into court. They don't want this publicized. They want to keep it very quiet, and most likely they're going to settle and pay these people off. How much, we don't know. But it's just amazing how they can twist the law and twist everything. Now, we understand that this economy is dead in the water here. If you really look at it, we see there's $300 trillion worth of debt in the world. That's about 3 times the global GDP, which means every bit of potential collateral is pledged to someone, somewhere, in some fashion. Which means this really can't be paid back. It's completely impossible. And what's even worse is that this is going to be an unorganized unwinding of trillions in debt. And it's going to be a complete mess when this happens. And we can see there are warnings coming out from all over the place. Schiller is warning that stocks are partying like it's 1929. He says the latest lurch upwards in stock prices has just taken market valuations up into the skybox levels. And it just went from flashing amber to flashing red. And what he's saying is that this just went off the charts, and there's a gigantic risk of this whole thing just crashing. And we can see right now that the S&P 500, well, it just jumped to 27.9 times the corporate earnings of the past 10 years. This is about the same level that the market hit just before the crash of 1929, and it is far higher than in 2008. What does this tell you? This tells you we're in big trouble. And Schiller is using something called cyclically adjusted price to earnings ratio, or CAPE. It is also known as the Schiller PE, after Yale's Schiller, who won a Nobel Prize for research into it. His data shows it has been a strong indicator of future stock returns going back to 1871 and the days of President Grant. Now, CAPE has plenty of critics. Many people on Wall Street will tell you to ignore it. It's not important. But they use it incorrectly. The CAPE has said stocks are overvalued since mid-1990, and many point out, yet shares keep going up. Well, maybe, but as it happens, a new research paper by two economists strikes a strong blow on behalf of CAPE. In a nutshell, this is what it is. Investors shouldn't flee stocks simply because the Schiller PE is above average. They shouldn't flee stocks even when the Schiller PE is way above average. But history has said they should flee stocks when the Schiller PE is at extreme levels, like now. Only when the CAPE is higher than 27.6, the stock market proves to be a really bad investment. And guess where we are? We're at that point. And this is why Schiller is out there saying the market is flashing red. And when you look at this, this is another indicator showing us that the system is coming down. Now, Eric Sprott is out there, and he is looking at the stock market, and he says it's a complete propaganda tool, which I agree. It is completely a propaganda tool. And what he's saying is that when you look at this, they're using manipulative techniques, and the Fed right now is pouring in huge amount of funds into the market. Because the only thing that can explain the move in the stock market after the election is massive Fed stimulus in some form. Either direct cash injections done in a format that won't show up in the Fed's balance sheet, or a massive spike up in the availability of short-term credit lines made available to banks and extended to hedge funds. And this is why we're seeing this done. And we've seen the Fed do this before, where they've loaned the banks funds at 0% interest rates. They tell them that, listen, you can't take this out. You can't loan this out to the people. You have to put it into the stock market. They make a profit. They go back to the Fed window, and they don't pay any interest on the money that they took out. And we see this right now. Even Gallup is out there. The CEO, well, he is warning that we have major problems. And the U.S. Council of Competitiveness asked Gallup to conduct a pro bono comprehensive study of U.S. growth and productivity for the Council's 30th anniversary. The chairman, Jim Clifton, said, yeah, sure, I'll do it. And a Gallup senior economist led the study. Top Gallup experts and esteemed external senior scientists reviewed it to ensure statistical, theoretical accuracy and objectivity. The study released today finds that, well, there's no recovery. Since 2007, U.S. GDP per capita growth has been 1%. America is dangerously running on empty, and guess what? It's about to completely fall apart. J.P. Morgan's quant, Marko Kalanovic, which we've heard from before, says, well, we've just returned to the dark side. He is warning of a coming market turmoil. That things do not look good at all. This entire system is going to completely fall apart. And we can see at this point that the central bankers, the elites, the government, they're setting this up completely. The whole system is about to come down, And it's going to come down so hard, so fast, that people are not going to understand what happened. And this is why, right now, you need to start preparing for what is coming. If you haven't gotten food, get it. If you haven't traded some of your currency in for gold and silver, do it. If you haven't stocked up on water, do it. If you haven't made other plans where you might meet your family in certain circumstances, do it. Make sure you have additional medication just in case. And make sure you have cash on hand outside of the banking system. You need to get ready for what is coming. I see a lot of people saying, well, everything seems to be good now. Market's going up. Well, this is one gigantic illusion. They are tricking the population. Just like they fed us all this fake information all this time, how they lied all throughout the years, this is no different. Now, there are many different things that could cause this economy to come down. And we know that the central bankers, the elite, the U.S. government, they don't want this to come down without them bringing it down themselves. And we see what's going on in Italy. We see what's going on in Germany with Deutsche Bank. We see what's going on in Japan. And they're very nervous about a black swan where something just starts to unfold. They can't stop it, and it continues on. And we see there's a banking crisis brewing at this point. The Italian banking system is a mile-high house of cards. And it looks like the collapse is imminent right now. If we look at Monte dei Paschi, this might spark everything off. Now, they're trying to contain it. And if you notice, they tried to contain Bear Stearns, AIG, Lehman, and everything started to fall apart. And we can see right now that if the capital raising efforts fail, if they don't nationalize the bank, and they can't prop it up, they're going to have to resort to bail-ins. And this would have a really bad effect on the rest of Europe if they do this. And people will look at this and say, okay, we see what's going on, and this would start to bring down everything. But we have to understand that Italy has one of the most indebted governments in the world. It borrowed over 2.4 trillion, and its debt to GDP ratio is north of 130%. For comparison, the U.S. debt to GDP ratio is 104%. But the situation is actually much worse, because GDP measures a country's economic output. And it's really misleading because the mainstream economists count government spending as a positive when calculating GDP. And really, you should really count this as a negative, just like they count debt as positive. Over 1 trillion worth of Italian bonds actually have negative yields. That's crazy. This means there are two possibilities for this situation. First, the European Central Bank will have to put the printing presses into overdrive to accelerate its program to buy Italian government bonds. The alternative is that the Italian government will have to acknowledge it's bankrupt. I don't think they're going to do that. So I think they're going to have to push the printing presses into overdrive. Because if they acknowledge bankruptcy, things will start to rapidly deteriorate. But when we look at this, we can see that things are really starting to unfold right now. And the situation is going to get a lot worse. It's not going to get better. It's not going to improve. Even if they put a little Band-Aid fix on it, it won't matter. Because it's like a small snowball coming down a mountain. It's gaining speed. It's getting bigger and bigger. It's getting larger and larger. Yes, it might take a different path down the mountain, but it's still getting bigger. And eventually what happens, it gets so big that it doesn't matter which path it's on, because it covers the entire area and smashes everything in its path. This is what's happening right now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.